Good morning, everyone. How are we doing today? So, I was asked the other day a pretty interesting question that I want to share with you and then kind of share my rationale. I do this to really double check what I'm thinking, get your opinions, see if we are aligned. And this was from someone in my network, kind of, a friend of a friend who was asking about investing. We both are about the same age, which means we both experienced the dot-com crash. We experienced the real estate crash. We experienced the run up in Bitcoin. We've seen commodities take different runs. And, this individual was clearly flustered, clearly felt that there was kind of no way for the average Joe to be successful. And we started talking about the different manias that we've experienced in our lifetime. And what it really came down to, in my opinion, if we try to connect Bitcoin and gold and stocks and real estate and dot-com and Great Recession and all of those things, there's really one variable, in my opinion, that ties all of those together. And that is long-term overconfidence in your belief, whatever that is. And again, being confident in your trading strategy, in your asset, in all of those things is it's what makes us who we are, right? And there will be times when you are right. Think Bitcoin. I don't know, when did that happen? 7, 8 years ago. It got so hot that grandmas started talking about Bitcoin. Real estate going on forever, dot coms, all of that stuff. So I think when you really boil down to it, it is long term overconfidence in oneself's opinion or stock. I don't think I don't think personally there is ever one asset that is always right. If that were true, it would go to the moon and it would be okay. I think every asset has its time in the sun and then some time not in the sun. But here's some things that when we were talking about that are signs that you might be long term overconfident in whatever you choose to invest in. And I look at myself when thinking of this. First is you're constantly talking about, hey, I made X, I made Y on your trade. When in reality, you have not made squat. You do not make until you sell or take some profits. I know this firsthand. In the dot-com era, I was saying I made X or Y or something tripled or quadrupled or whatever it was. But I didn't because I didn't sell. So if you are on one of those hot winning streaks, maybe think about taking your original capital back so you're at least even. Maybe, look at doing something, taking half of it off the table. But if you are in one of these times where it is just running hot and you're coming up blackjack every time, just know that all things come to an end eventually. Another one that I see very common, and again, I look myself in the mirror. I got so confident in my abilities to pick stocks back in the early 2000s that I started this in a cash account. But hey, you keep doubling your money 3, 4, 5, 6, 7 times, you eventually get cocky or stupid, and you go out on margin and place bigger and bigger and bigger bets. And again, those bigger bets pay off until they don't. And then they don't really bad. Second, or third, I should say, you don't take the small loss, right? You're betting hot on some stock. You're betting hot on some commodity. You're betting hot on some asset class. And it dips 7, 8, 9%. Instead of taking a little bit off the table, you proclaim buy the dip, double down, buy more. Maybe it works. Maybe it doesn't. History says buy the dip won't always work, and eventually you'll get caught on the other side. Another one is you double down, right? You find a winning hand, you find a winning asset, and you clear the decks of diversification. You have a winning streak in gold or Bitcoin or a particular stock, and it goes up and up and up. And then you're like, shoot, I need some more of this. Let me sell this, let me sell that, and let me put in this one asset. Again, long-term overconfidence means it'll feel good for a little bit and then it won't. And then it comes to the end and the market, whatever it is, it goes down. I don't remember Bitcoin, what did it go from like 20,000 to 4,000, gold from 2,000 to 1,500, real estate from 200 to 100, whatever it was. And at that point, you just hold on. You hold on for years. The opportunity cost is not there. You're just, I'm not leaving. I'm not going to sell at a loss. I'm going to keep it. And you got dead money just sitting there. Just, it's out of the sunlight. It's out of the flow. And you're just going to wait and wait and wait. And if you do that, most people break even, not realizing that, hey, they might be in another time of sunlight and there's money to be had there. So again, I believe the greatest pain that has caused myself as an investor, that causes the market, is long-term overconfident in one's asset of choice. Think about it. Is there ever been an asset that's been the right answer always? I think not. Again, there's clear signs when you are overconfident in your asset of choice. You're not taking any profits. You're just declaring every day, hey, I made 7, I made 2, I made 8 grand. You ain't made squat. The balance is higher, but you ain't made it till you sold it. Do you go on margin to buy more? You don't take a small loss. You double down, you remove diversification. And then when it does go down or crash, you just hold on and tell yourself it will come back. So that's what I think. Let me know what you think. Again, long-term overconfidence is a big pain. I suffered this personally in the dot-com era. I had turned, I think it was 7 or 8 grand into almost 200 and then lost 80% of it in the span of seemingly weeks. It was probably months. I saw people firsthand in the Great Recession when single family homes were the investment of choice, and they suffered a bankruptcy. I saw flippers in the Bay Area who had $1 million flips that chose to hold the inventory instead of taking a small loss, lose everything. I saw there's a friend of mine who had Bitcoin that was walking around with one of those little fobs talking about he was a millionaire, didn't sell, poof, gone. Go back to the tulip mania of way yonder. Again, people were overconfident. So again, long-term overconfidence is the biggest creator of pain and biggest creator of market crashes. Long-term overconfidence means the balloon gets bigger and bigger and bigger. Something happens, pop, destruction. Let me know what you think. Take care. Leave comments below. If you like these things, you like questions, talking about real estate, investing, money, go ahead and hit subscribe. Take care.